Okay, good afternoon once again. I told you we had finished with cooperative society, but we are left with an aspect. So I'm here this afternoon to talk about that aspect of it, cooperative society. So the next 10 minutes, we'll be through with that aspect. You know, when we talked about superproprietorship, we learned about the sources of finance available to the superproprietor. So if you're a superproprietor and you want to, as you are running that form of business, where do you get money to run that business? Where did you even get money to establish the business? Where do you get money for business operations? That is what we learned is meant by source of finance, and we learned about that. When we came to partnership, we also talked about sources of finance available to the partners. For example, the main one we said is partners' contribution and others. Then companies, we talked about sources of finance. Where do you get money for business operations? The major one that we learned was sales of shares. And we learned that for the public companies, they can float shares. We use the term float. We said public companies can float shares. But the private one, they don't float, but they also sell shares. So they issue shares, but you have to make personal contact. You cannot advertise your shares. We learned about that. Then we also talked about debentures. We said these are exclusive to limited liability companies. It means they can sell shares. The public companies are the only forms of business organizations that can float shares. Then we came to cooperative society. That was what we learned the last time we met. We learned about the meaning of cooperative society. We learned that a group of people who have common interests come together. They contribute capital, and for the purpose of either producing, if it is producers cooperative society, they can also distribute, they also consume, and we have the consumers cooperative society. And we said for the welfare of their members. So we said when a group of people voluntarily, you are not forced to come in, you voluntarily pull resources together for the mutual benefit of each one of them, then it means cooperative society had come in. So we learned about other aspects of it. We talked about even the Cooperative Society Act 1968, NLCD 252, and this is a copy of the act. If this one you see here, when your seniors, those in Form 3 now, when they were in Form 1, this was given to them as assignment, and so it was a group assignment. So if you look at this one carefully, you will see that they did it and they had 10/10. That was a group assignment, and the group members are here. So don't be surprised when you come back to school, I give to you as an assignment, and you also, there were others who did, some of them brought the Cooperative Societies Act 1968, others brought partnership, the Incorporated Private Partnership Act, and then we also have what you call Sales of Goods Act. It was a group work, so take note of that one. So this is the volume of the Cooperative Societies Act 1968, NLCD 252. And we have learned that it has 70 sessions. Then we talk about the features of cooperative society, and then the advantages and then disadvantages. We are left with one aspect, and that is sources of finance available to cooperative society. So if you are operating cooperative society, number one, where do you get money to even start? Whilst you are in operation, where do you get money for business operation? That is the source of finance. The first one, which is the main one, which is their main source of finance, is what we call members' contribution. So if you look at here, we have sources of finance, and then number one is members' contribution. So if you are a member, depending on the type of cooperative society you have joined, whether producers cooperative society, consumers cooperative society, or the credit and thrift cooperative society, which we said is the same as credit union, you have to make some contributions. And the contribution, number one, you may pay dues. So this members' contribution can be in the form of dues. Or you may have to buy shares. And depending on the number of shares you own, when they are selling surpluses, you get that. Or you pay dues depending on the type of cooperative society that you have joined. Apart from that, the rest we have learned them under the various forms of business organizations. So apart from members' contribution, which is the major source, we also have loans. They can go for loans from bank, and banks are ready to give them loans. We learned that one as one of the advantages. Then we also have what we call trade credit. We learned that one under super proprietorship. We learned that one under partnership, and even companies. They can buy, those who buy goods, for example, the consumer cooperative society, they can go and buy their goods on credit and make payment later, when at the time they agree with the seller. So they can have what we call trade credit. Then undistributed profit, which we learned elsewhere as plowing back profit. So when profit is not distributed, the other forms of businesses, for example, companies, when they make profit, the directors can decide that this is the part of the profit we are going to share. We are going to share among our shareholders. And that is the one they say dividend. So you are paid. Then they will plow back. They will retain part of the profit into the business for business expansion. Cooperative societies do the same thing. Remember, we have learned that the main focus is not for profit, but it is for the members. Notwithstanding that, in other words, the fact that we say they don't make profit doesn't, no, not that they don't make profit, but the fact that we say their focus is not profit. In other words, they are not profit oriented, but at least they make some amount of profit which they will share among themselves. So when they make profit and they want to expand their business, they may decide not to distribute all or part of their profit. So the part of the profit that they don't share is the one that we say it is undistributed. Then they will plow it back into the business. So that is also another source. Then other ones that we have already learned is leasing. We learned about what leasing is. We said that if you want maybe an asset, it can be a land, it can be anything, you don't have money to pay, you can't buy. So what you do is that you go to the owner gives to you. That's why it says leases it to you. The owner gives to you for a certain period. Then you pay rent. So when something is leased to you, you pay rent. For example, you cannot build a structure to operate. So you go and then lease somebody's building, then you pay rent. So leasing too is another source. Then we have sales and lease back. Two things. If you understand the concept of leasing, then you know sales, then the two, sales and lease back. That means you had an asset that was yours. So you were the owner of that asset. But you need money. So what do? You sell the asset to somebody. The moment you sell the asset to the person, you lose ownership of the asset. Now the person becomes the owner of the asset. Then the next thing you do is that you lease it from the person. So if it were a building, you sell the building for, let's say, 150,000 Ghana cedis. Then now you have lost ownership. So you now go and then lease it from the one whom you sold to, and you pay rent to the person. It can be anything. Maybe you are Consumer Cooperative Society, you need tractor to cut your no, not the Consumer Cooperative Society, Producer Cooperative Society. You need tractor to cut your oranges from farm to the market. You don't have money, you cannot buy the tractor, so you can go to somebody, lease the person's tractor, and then you use it to cut the goods. Then after the period that you agree with the person, you return to the person. Then you pay something to the person. So you can do that, leasing, or you had it, you sell, and then you lease it back. Then you also have high purchase. You can buy some things on high purchase. You can buy certain assets on high purchase. What do? You don't have money. For example, you don't have enough money to buy the tractor yourself, but you want to buy it. You don't want to lease it. You want to buy. So you can agree with the seller. You say, oh, I have this amount of. They say, how much? So the tractor is 300,000 Ghana cedis. So okay, I have 50,000 Ghana cedis. Can we pay 50,000 Ghana cedis? Then it will be left at how much? I know you said 250,000. Yes. So that 250,000 cedis, the person will spread it over a relatively longer period of time. It can be, let's say, 2 years. So the person will divide it. 250,000 cedis, and then probably the person will say that, okay, every month you should pay 10,000 Ghana cedis. So you pay 10,000 Ghana cedis every month, and that is what we call instrumental payment. So in high purchase, you buy the product. Look at it two ways: hire. So the first part of it, when you have not finished payment, you have hired it. Then when you make the last instrumental payment, then it becomes your own. So for high purchase, unless you finish with the last instrumental payment, the thing can never be yours. It still belongs to the one who gave to you. So in this case, you paid 50, it is not yours. It is still for the one who sold to you. Then the person said, pay 10,000 cedis every month. So you pay 10,000, second 10,000, third 10,000. So you get to the last one. When you pay the last instrumental payment, then it becomes yours. So that is for high purchase, and it is also available to them. So we have talked about the sources of finance available to cooperative society. The main one, their main source is members' contribution, loans from bank, trade credit, undistributed profit, or what you say, planned by. Then we also talk about high purchase, we talk about leasing, we have talked about sales and lease back. So that is what you should know. If there are other sources you have learned, you can also go and search for other sources. But these are the main sources of finance available to. But remember that there are some sources that you learned under companies that cannot be here. For example, we learned about debentures. You know, they cannot issue debentures. We cannot say personal savings like you learned under supervisors. So you should know the sources that are exclusive to each one of them. In other words, some of the sources, each one of them can use, but there are some that it is only meant for a particular form of business organization, and that is what we should know. So ladies and gentlemen, that brings us to the end of our lesson on cooperative society. If you see these books here, there are past questions on that one. Let me read some questions and then see whether you can answer them. They are objectives. They are objective. This one is objective. It is named Topical Past Question. The volume 1 is the objective from 1993 to 2015. It has been compiled. So all the questions they have asked since under cooperative society since 93 when the then SSC started and they changed it to us. Everything is here. This one is from 93 to 2015. Then this is a supplementary one. That one from 2016 to 2021. Let me read some questions. Cooperative society. Number 1. Which of the following statements is not true of cooperative society? And that was in November 1994, question 38. Which of the following statements is not true of a cooperative society? A. It is formed to serve the interests of members. B. Each member has an equal say. C. Members have unlimited liability in case of bankruptcy. D. Profits are shared according to the members' transaction with the society. So you can decide, pause the video as you are those watching. You can pause it and then answer the question. I'm not going to give any answer to you. You can answer it for yourself. Question 2, 1997, November. Question 24. Irrespective of the number of shares held in a cooperative society, a member is entitled to A. No vote during meetings. B. Vote equal to the number. Vote is equal to the number of shares held. C. Vote is equal to half the number of shares held. Then D. One vote during meeting. So that one too, you pause and then you can answer for yourself. Question 3. Profit of a cooperative society are usually shared according to A. The Ghana Companies Code 1963 Act 179. B. Regulations made by the District Assembly. C. The patronage by each member of its activities. D. The part played by members in the management. That was in November 1998. Question 4. The business organization in which members contribute equal amount of capital and each member is entitled to one vote is known as. This one, even if I don't give you the options, you should be able to tell me. But let me give you the options. A. Sole proprietorship. B. Cooperative society. C. Joint stock company. D. Public corporation. That was in 1999, November. Question 6. Question 5. The survival of cooperative societies is hampered. So the key word is hampered. So if you don't understand hampered, then that's where you'll be in trouble. It's hampered by the A. Lack of skilled personnel to manage them. B. Proliferation of retail outlets. C. Failure to grant loans to members. D. Limited scope of their activities. So that is for 1999, question 11. November 1999, question 8. was on cooperative society, and they say November 1999, question 11 was also on cooperative society. I'm repeating there. No, there is no need for me to repeat because you can decide to pause your own and then go, or you can go back and then listen to again. So there is no need for me to do that. Question 6. The primary objective of a consumer cooperative society is A. Compete favorably with other retail stores or shops. B. Sell at low prices to its members. C. Share high dividends among its members. Then D. Supply every need of its members. November 2001. And so on and so forth. I have about 18 questions here. Let me read the last question here, question 18. That was question 18. Which of the following business organizations is a member allowed only one vote at meeting? I think we have made this question before. So that is that. Then let me read some few questions from the 2016 to 2021 on. Question 1, 2016. That was private candidate question 8. The beneficiaries of the operations of cooperative societies are the A. Communities, B. Creditors, C. Government, D. Members. Question 2. In a cooperative society, a member is entitled to A. No vote during meetings, B. 1 vote during meetings, C. Vote equal to the members, no, vote equal to the number of shares. Then D. Vote equal to half of the number of shares. That was in 2018. Then let me jump and read the last question, which is the question 5, 2021. A business unit in which profits are shared on the basis of members' patronage is A. Cooperative society, B. Partnership, C. Private companies, D. Public limited liability companies. That was school candidate 2020 question 30. So you see, if you took your lessons serious, then you should be able to answer all these questions. But when you come back to school, you'll be doing all these things. So take note of that. Till we meet again for our next lesson. Bye bye. But remember, if you have not subscribed, do so. And then make comment under the comment section. If you don't understand something, ask person there. If the lesson was good, write something there. If the lesson was not good, write something there. And whatever you put there will be answered. So bye bye and good afternoon. Thank you.